Hi and welcome to this video update. I'm on to CRUDE now, CL. There's something about this movement that just seems to resonate with me, and so I've returned to my old strategy, which is what I've nicknamed the storybook trading strategy. And it's basically made up of all the things I've learned over the years, primarily based off of what I learned with my time with Tony Hansen, a technical analyst who I mentored with in 2007. And so that involves things like the things she taught were pace, support and resistance, trend placement, and correction periods. And then the fifth of her 5 technical tools was, so what's this? I can't even remember what that is now. Support and resistance, pace, trend, placement, correction periods, and volume. That's the 5th. And so I mentored with her, studied all her material, digested it, made it my own, and I don't use the correction periods anymore, although I'm aware of them. I do use volume, I do use trend, very much use trend placement, support and resistance, and pace. So those are the 4 tools I'm left with. With that in mind, I also adapted a pattern which she taught me, which is the momentum reversal, which we've spoken about in another video. And that's what I base my storybook trading on. So basically I have the momentum reversal, Momo reversal, and I have the pattern failure. The pattern failure is the other side of this momentum reversal. And if you connect these 2 patterns together, you have on any small time frame, you have a number of opportunities which you can then filter and learn how to manage based on a larger time frame. So what you see in front of you is the 1 minute. On my right over here, where the camera is, I have the 30-minute. And then on the left over here, I have the 15-second. The 15-second chart I'm using to manage trades, trailing stops, and so on. Looking for exits on the 15-second chart, exits in terms of volume, using the 1 minute chart to look for the patterns, the momentum reversal and the pattern failure, and also using volume on this chart as well, and wicks, and then using the 30-minute chart on my right to gauge whether a move is an impulse move, or, which we mentioned in the video that I shared with you with regards to the momentum reversal, impulse move or a correction move. So you can trade both, but obviously the management of one or the other is going to depend on which one you're trading. So let's apply this knowledge, momentum reversal, pattern failure, impulse and corrective moves, to what happened today. So today I saw this, 1, 2, 3. This is the momentum reversal, which I usually annotate with a little square box on NinjaTrader, but I'll just put that for now. So this is the momentum reversal. Then the failure of the momentum reversal is if you think, or your higher time frame or whatever you're using to filter direction, if that's saying up but the momentum reversal is pointing down, as is the case here, then you look for the pattern failure, and the pattern failure can come in many forms, candles, volume, but essentially you're looking to take the other side of the momentum reversal, which could be here on this reversal candlestick. It could be here on this one after you have the change in polarity, because you have the wick here and the wick here, otherwise known as an appendix. So I would label this an app like this. And this is all the material that I was meant to put together into a course, but I didn't get around to it. So I'm just going to share bits and pieces here as I trade it myself. And then these trades that I took here was a fade. So this, according to the 30-minute chart, was supposed to be a correction, and it was indeed a correction. It's not always going to be that way, but if your read on the 30-minute is good, then more often than not you should manage the trades according to what the 30-minute says or whatever your higher time frame is. So here we had a fade because I was looking for it to come back down and trigger this 97 level, 52.97, come back down there, exhaust itself there to take the bigger move up to 20, which is a golden mean projection of this momentum reversal. As you can see, it's bracketed here and 20 is right here. So that's what I was looking for. 97 to 20, 23 cents for a 6-cent risk, almost 4 to 1 there. And for whatever reason, and this has historically always been the case with me, I like to be contrarian. So I've gone with the correction. I tried it with a 3-cent stop, 3-tick stop. It failed. It looked like it was holding, so I tried with a second and what would have been a final 3-cent stop before I gave up on this direction. That means if it lost again, I would have lost 1 stop in essence, because I do 6-cent stops per trade. So I took a 3-cent hit, then this final 3-cent stop held, and it went down towards, I had my target at 97. I tried to put an order in at 97 to reverse, but NinjaTrader won't allow me to do that. So I had to create a new strategy to be able to do so. But this time I didn't. So it came down, gave an exit at 01 for 9 cents. So I lost 3, gained 9, and then it was too quick for me to get in here at 97. Then I tried to get in, I put the order in, it only came down to 98. Then it gave a signal after this candle to get in at 01, and that didn't trigger, and then it went on its merry way to 20. Had a fade up here, which again is another momentum reversal into the golden mean extension of this prior momentum reversal, and that again was supposed to be a corrective move, so I took less, was more prudent with the management, and when I look to the 15-second chart, I will trail in a more aggressive manner if I'm going with a correction rather than an impulse move. So that's a quick mashup of what I did today, and that's what I intend to go with for now, because the stats are showing that crude is something I should put more energy into. You know, I'm making new equity highs as far as crude is concerned, and so I'm just going to continue doing what works until it doesn't work anymore. And you know, the storybook trading is something I've developed myself and had a lot of experience with, but I abandoned essentially because it's something you should do for short bursts of time, because it's quite intensive with the back and forth and the change in direction. So it's not something I could do for 6 hours a day. I would do it 2 hours a day, 3 tops. And the pace at which I was making money back then when I was using it a year ago, a year and a half ago, and I started using it like 3 years ago, it just wasn't enough to pass a combine, because back then the combines had a 20-day expiration date, and you know, all the rules were not conducive to using this system. Now that we have an indefinite period of time, I'm going to go with that and see how we go. So today, so far, I may try one more trade today, but at the moment we're at 98.96. The account once again is back to break even. I'm like $3 under the 3,000, no, $2.06 under after commission. So essentially I'm at break even on the account again, with most of the drawdown behind me. So let's see how this goes, and for now it's going to be powered by Crude. So if you like this video, give it a thumbs up, subscribe if you haven't, and as always, follow your rules and stick to your trading plan. See you next time.